Hey guys, it's been an active 24 hours to say the least as we approach the Bitcoin halving. This is a big event, a long awaited event, right? We obviously have some volatility happening here. And so we are going to take a look at the charts and see if we can figure out what the next move is going to be for Bitcoin as we move through this halving event and on to the remainder of the year, right? Long anticipated event for sure. But first, real quick disclaimer, I'm not a financial advisor of any way, shape, or form. I don't provide financial advice of any way, shape, or form. Nothing I say or share should be considered trading advice or investment advice. Trading is risky. Do your own research. Manage your risks so you can stay in this game for the long haul. In full disclosure, I'm a partner in a couple of crypto-related firms. You can read the fine print if you wish, right? So let's turn our attention now to the halving. Obviously, that's happening so fast, right? It's coming right up on us here in less than 24 hours at this point, right? Supposed to happen sometime between now and tomorrow, right? So looking like on the overnight, I actually have this cool little countdown timer that I found. So I'll start with we'll start with that as a baseline, right? And move from there, right? we the clock is ticking, right? We have a day and 13 hours, it says. Let's see. Maybe it's going to be 13 hours. We'll see how this thing all shapes out. It's a moving target, right? Looking for block 210. Or actually, it would be block 840,000, but that's coming up here. It happens every 210,000 blocks. So we know the halving is coming up very, very quickly, sometime in the next 24 hours. And so we've also seen, of course, some serious volatility here over the past 24 hours. I'll take this into the daily chart here, get this stuff out of the way. And as we can see, right, another retest of support down here at this our lower low, right? So in this series, our first lower low and really the deepest one that we've been watching was back from March 5th, went down to around 59 to two and a quarter on Coinbase. It varied a little bit, from exchange to exchange, of course. And then we had a series of higher lows, higher low. Things were looking good up here until last weekend when we had a catalyst from some geopolitical tension in the Middle East, and we saw things break down. All right. But that breakdown took us to a retest that obviously annihilated this first lower low. And then it annihilated this second lower low. What you don't want to see is three lower lows getting taken out, and especially this one right here, because that opens the door to go retest this level, which, as I mentioned yesterday, has never been retested, nor has this one, right? We consolidated here in the 44, 45K range, actually in the 40 to 45K range for a long time, with the sweet spot being up here around the 44K range. Cleared that, and then a big move up to the 50 to 52K range, consolidated here briefly before the next step up. So we know that historically there's lots of history of corrections around halvings. We discussed that yesterday quite a bit. And I see I'm on the wrong chart to show you that. We discussed that yesterday quite a bit. And, so not surprised. I've been calling for this correction for quite some time. And whether what we saw this week, 19% and change, whether that qualifies and pacifies the market that's been looking for 20% or more, well, that remains to be seen. Okay. But what is important to note here is that we have some, potential new patterns forming, and that we have an outlook here for what the future is. Obviously, the popular view is that after the halving, we should see price go up because there's a decrease in supply, right? I think most people who are watching this at least have an understanding of what the halving is. If you don't, do a little research on it. I have went a little bit more in depth on it yesterday, and I did one, I don't know, a few weeks ago on the halving. But there's plenty of info on the halving if you really want to learn more about it. I just posted a thread too on the X platform too. So if you want to check that out, you can. But what we've got going on here is the widely held view that price would go up, but we've obviously had some price degradation here. Now, these moves here and here, all of this up, quite frankly, has, in my opinion, been driven by the speculation on the ETF, and then, of course, the ETF was approved in January 10th to be exact. Here's where we got that ETF approval. Here's where it launched. We had a dump, courtesy of Grayscale dumping, a ton of long held Bitcoin on the market. And then things stabilized and we started to see things coming out here. On that note, let's just switch over real quick to what the ETF flow has been here in the past couple of days. We saw things leveling out. We had that dump over the weekend. Things leveled out for a lot of the entities. Of course, Grayscale continues to sell, and BlackRock continues to buy as they have consistently. And then we had a bit of a pause here through a lot of the entities, a little bit of selling from Kathy Wood's ARK Invest, a little bit of selling over here from BitB. And then yesterday, we saw some buying come back in from these entities. Not huge volume, but nonetheless, renewed interest. Listen, when price dips, obviously, that's a reason to consider buying. And so to me, this just looks like the asset class is maturing. No more is it just, in the beginning, we saw 10 years of pent-up demand that led to, this rapid incline. And now we have things stabilizing on that note a little bit. Now, what happens next, right? We have, again, I keep going to the wrong chart. What happens next? We have a new all-time high up here. We spent a lot of time trying to break this 69K level. And, we cleared it, but with wicks on nearly every daily candle, I had called, made the point that this looked like weakness to me, and it was. Things broke down, came back up, retested. We still had weakness. It failed, broke down again, came back up, retested, and of course, the rest is history. So where's the strength right now? We were hoping to validate an RS flip here at 69K. It didn't happen. So maybe with this now second retest of the lower low at 59 and change, maybe this will be where we validate an RS flip, but we can't guarantee that yet, at least not until we break back above these levels, right? So lots of strong technical resistance right here. You can see a death cross between the 21-day moving average and the 50-day moving average. Losing either of those, not a good thing. Yeah, it's a bit of a lagging indicator. So most of this move may have potentially played out. But when this happened, I think when this happens, it triggers algos, and that helped with last night's dump, right? But while that was happening, I was watching it very, very closely. I was watching the liquidity on fire charts, and the thing that I notice here, and I'll take you into the daily here in a second to show you that. But the immediate thing that I notice here is that we have two things happening here that I think dynamically affect the volatility. One is that, just an increase in the volume here in the near range is positive. I've been telling you for a long time that we need to see brighter colors, which equals more volume, right? Here's the volume scale here. So we need to see brighter colors, like in this example, white, top of the chart, the hottest color, that was nearly 60 million. We don't have that concentration of liquidity on either side at the moment. Now, seeing depth in this ladder is a positive thing. Seeing chunks of this ladder move up from the lower rungs of the ladder, if you will, up higher, that's a bullish sign to me. That's an early indication that there's less sentiment that price is coming down here and more sentiment for this level up here. Now, if I take this into the daily, last night when price was dipping, I started seeing some of this liquidity on the move, and that gave me some confidence that that price was going to recover from there. I was really watching it closely, thinking of cutting some positions from the upper echelons of my ladder, but I thought that they would recover, and they did, right? So does it mean it's up only from here? No, absolutely not. Up only is not a thing. I tell you that all the time. Um, but what we have here is if we can agree on two things. Here, a good example, liquidity equals sentiment, right? We can annihilate the technicals. We can, lines on charts are subjective, and we can annihilate all of these technical levels in here. And that happens. That happens from time to time. Certainly in periods of increased volatility, that can happen, right? These levels can get overshot, and then we see a recovery, or potentially not, right? But what doesn't lie is the liquidity in the chart, right? So we know that we have support strengthening here at this 58 to 60K level, which is a positive thing. We do have confluence with that on the chart. As you can see, this red zone is the 58 to 60K level. So that's a positive thing. Seeing that confluence in the chart is a positive thing. Doesn't mean we can't break down, because we can. Doesn't mean rug pulls don't happen, because sometimes they do. But the fact that this liquidity has been building in here is a positive sign. Eventually, we need to get to the point where we have a larger block close to the active trading zone. And I'm talking 50, 60, upwards of 100 million concentrated at one level. As you can see historically, it's those brighter areas that create the foundation for the big bounces. And historically, those have always been bigger than what we see right here. This depth is fantastic to see. This is very positive. And it now is rivaling the volume on the upside in terms of resistance. But what we don't have is this deep concentration. Look, this was 96 million, and another 93 million, and another 58 million, and another 32 million. So this was well above 200 million, probably more than 250 million, just stacked right here close to the range. That's what I want to see right here to give me confidence that bulls are ready to go after these levels right here. Until then, we could range. So let's say the halving is complete here over the next day or so. That doesn't mean that we're just going to shoot through this. As you can see in the charts, there's still a lot of reason to expect us to continue to consolidate in this range until we can again reclaim these moving averages, reclaim the 69K level, which was the 2021 top, see some consolidation up in this level, and then go after the all-time high. And then we would want to see some consolidation up at this level above this, right? To validate the RS flips. Those are resistance support flips for anybody new. To validate the RS flips and create a foundation for a larger move. Now, this diagonal line right here, let me widen out so you can see this is my lifetime channel. Again, lines are subjective. This is how I draw mine. Draw yours however you want. I don't need to hear about it. What I do want to illustrate here is that Bitcoin has not yet reclaimed this lifetime channel throughout the bear market, right? So we had this, beautiful cup and handle scenario here that I had illustrated a long time ago. I'm not even going to take the time to go find that, find those drawings. I want to just keep things moving forward here, but look at this right here. So what if price doesn't make it back into this channel? We can still appreciate quite nicely in price, right? Anybody would complain about $150,000, $160,000 Bitcoin? No, but this serves, in my opinion, as a glass ceiling of resistance until we break into it. In my opinion, the real price discovery comes when we get above this level and test support and stay above this level. That is when Bitcoin is off to the races for price discovery to start printing new all-time highs on a regular basis. That's my opinion. Yours may differ, and that's okay. You got to do what works for you. I do what works for me. So something else I'm noticing here in a potential pattern forming is just maybe what if this develops further into a bull flag in this range? And if we were to see something like that, let's say that this would be our flagpole, and went up to the top here. And I want to make that white because I like pretty colors and it matches what I'm trying to do here. Um, so if this were to develop further, right, and we see more consolidation in this range, and we could debate whether this needs to be a sloped line here or not. At this point for this illustration, it doesn't really matter. Let's say we continue to range through here for some time past the halving, and we then get this measure move that comes out the top. Where would that put us in terms of price? This is just this is a random exercise here. That would put us in the realm of $107,000 Bitcoin price if this develops further as a bull and validates as a bull flag, and we get that breakout. That's a legitimate target, right? So just something to keep in mind. I'm not saying we're going straight to 107,000. What I'm saying is, if this develops as a bull flag and we see a breakout to the upside, and of course can clear this channel, then that is a reasonable expectation for a target for that move. In terms of downside moves, absolutely, they can happen anytime. They happen right after the halving. They happen well into bull markets. We have a history of that, and I've shown you that, right? So those targets right now, should we see a breakdown from here, from the current all-time high, I've illustrated that for you guys regularly. I'll do it again in case anybody's new to the stream here. A 20% move takes us squarely down here to the 59K level. We've come really, really close to this. We've hit 19% and change. So maybe that's close enough to the pin. Time will tell. Should we lose this? Should we see a bigger breakdown? And there could be any sort of catalyst, whether it's a geopolitical one, whether it's an economic one, or whether there's another black swan hovering the pond that we haven't even imagined yet. Those, by the way, are usually the ones that really sting. We could see a correction to the 30% range, which takes us down to that 50 to 52K level that we looked at. And of course, we do have some liquidity stacked in that position right now. Should we lose that, then we would be talking about this 40% potential for a 40% correction down here at the 44K level. Now, in terms of liquidity, and remember, we said liquidity equals sentiment. In terms of liquidity, there is currently some Bitcoin, some USDT liquidity, bid liquidity stacking above 50K, right? In that 50 to 52K range. Not very heavy at this point. Bigger concentrations are well above that, right? Above the 55K level, and certainly 58 to 60K are the heaviest concentrations that we're seeing. So no sentiment to speak of for the 44K level at this point. If price would break down, then we would see, liquidity move into that level, just as we did here, right? There was not really much sentiment for 50K or even 55 until we saw this breakdown here over last weekend. So liquidity continues to move, right? It's an organic living beast, and that's something that we always have to be watching because it gives us clues as to what the potential next move is. And as you can see here, we have, again, more bid liquidity coming into this range here. Not a ton, but every block helps. Everything counts towards building this up, strengthening support here, and creating a foundation for the next leg up. Should we lose it, I just showed you where we could potentially go. So I'll give you one drilled in view here to the daily chart here. And as you can see, things are pretty thin right here in the range. Okay, so the fact that we've had some buying from this dip is a positive thing. I'm watching purple always and forever. Purple whales, those are the $100,000 to $1 million size orders. Of course, mega whales coming in here with large market orders as well. Seeing that buying is a positive sign, and gives me some reason to think that we could potentially get up here past 66 and go back and retest resistance at 69K and eventually 70K and on. 70K to me is more psychological. 69K is a technical level where we had so much resistance and years of resistance actually with the prior all-time high. So Just in terms of how this market likes to flow, just imagine, if you will, a halving on 420 with Bitcoin price at 69K. Yeah, that's we might start talking about the heavy hands of manipulation in this market if that should indeed happen. Uh, but that's kind of the game here in crypto for years and years and years, and we know it happens, right? It's not a good thing. To me, it illustrates the immaturity of the market, the fact that it is, you know, at times that easy to manipulate. As we see more demand coming into the market, including the ETF demand here in the U.S. and the new ETF demand that's going to be coming out of Hong Kong very soon. I think that will help stabilize things, but if these games are being played, if we can identify those games, then we can play along with, and that's what I think that's what I'd like to do by using liquidity, order book, and order flow data to help me make some of those trading decisions. Looks like we got a couple comments. Let me check in on those real quick and see if I can respond. Morning, Mike. I hate that people say the halving decreases supply. So not true. It merely decreases the rate of increase. Huge difference. Well, it does decrease. This might be debatable. It doesn't decrease the overall supply, because the overall supply is a fixed amount, right? The eventual overall supply of Bitcoin. What it decreases is the daily available supply, right? So if we are currently creating 12 Bitcoin, I think, per day, after the halving, it would go to 6 Bitcoin. And don't quote me on the numbers. Just know that it cuts in half. So it cuts the daily supply down. So in terms of a supply and demand model, that has more of a short-term impact on price than the macro view, which of course is already a fixed supply. So for some, no, you're right. The halving doesn't remove a single Bitcoin from circulating. That is correct. Doesn't take anything out of circulation. All it does is reduce the available daily supply, which means when we had at the heat of ETF demand, ETFs were gobbling up 10x to 12x the daily supply of new available Bitcoin. Okay, that means of all the Bitcoin being mined each day, they were gobbling up 10x that amount. And so if the demand were to stay at that level, which it hasn't, by the way, but if demand were to stay at that level after the halving, the available daily supply would be half of that, which would mean that what was at the time 10x the daily supply would then be 20x the daily supply. So in the long term, fixed amount of Bitcoin, right? That number has never changed, and it never will change. The only thing that's changing is what is available on a daily basis. And in a supply and demand model, if the market is buying up 10x the supply, and I'm just using ballpark figures here, if the market's gobbling up 10x the supply, then that means it's everything that miners have to sell times 10. So they're having to buy from sellers who already hold Bitcoin. At some point, there's a trade-off. People are unwilling to sell at certain prices. So that's what makes the market fluctuate. That's what makes prices fluctuate. Hope that makes sense to you guys. Appreciate the comment and the follow, Mike. So thanks for following along. I appreciate that, and appreciate all of you guys. So if you like the streams, please do me a favor, smash all the buttons, share it, and share a comment. I love to read the comments, and I engage with each and every one of them. So I appreciate that, guys. You're helping me grow the channel. It's new. Doing this live thing is new, and I'm still fine tuning and trying to make them happen in the morning. But life is busy, right? I'm still a work from home dad. I'm a girl dad, so I'm still juggling the family life with the business life and wanting to keep you guys informed. Not just you, but keep myself informed as well. So hopefully we're all trading better together. Hope the insights help you out. And hope you'll continue to share that feedback with me. Going to wrap it for now. If I can, I will chime in with another update later today. Got another feature called Bit Break where I'm just doing short, quick analysis on the daily progress. So if I have a chance to do that later today or sometime over the weekend, I'll crank some of those out for you guys as well. Going to leave it at that. Man, have a fantastic weekend. Buckle up through this volatility, right? It's expected. We know it's coming. You see these dark areas, dark zones really allow the volatility to happen. The zones with more color in them, with more volume in them, they minimize the volatility. Liquidity dampens volatility. Thin liquidity amplifies it. Just know that this has all been a shakeout, trying to shake the weak hands out, and the whales are proving exactly what they're, what that's all about. So if you have your targets, stick with your targets, right? No reason to adjust at this point, unless we see a breakdown below 59, below that 59, 58K level. I'm holding steady. If we break this level, then I reevaluate. I will likely trim some of my higher positions and recycle them into new trades where we find the new bottom, if this isn't indeed it. Going to wrap it at that, guys. Have a fantastic weekend. And as always, trade safe, my friends.